This is Chuck Carnevale, Chief Investment Officer for Great Companies, Inc., reporting on GameStop, the world's largest video and entertainment software retailer with over 6,000 stores worldwide in 17 countries and growing. In 2008, GameStop purchased Micromania France, a leading video retailer in Europe, and in the combination of that added over 1,000 stores to their store base in 2008 alone. GameStop is the clear leader and store of choice for a growing gamer culture with an expanding demographic. There are more and more females playing, as well as an older demographic based on things like the Wii Fitness program that's really expanding their opportunity, not just worldwide, but also throughout the population as well. Utilizing our Great Companies Fundamental Research Analyzer tool, you can see that GameStop has a great operating record since its spin-off from Barnes & Noble in the early part of this decade. Their earnings growth has been exceptional. It's averaged over 31% a year. Earnings went from 56 cents in 2003 to 62 cents to 98 cents, $1.11, $1.75. They earned $2.38 this year, and their forecast to earn $2.85 next year. 2008 was really an exceptional year. Fiscal 2008 was just reported on January 31st of 2009, or actually last Thursday, the closest Saturday to the end of the period. They earned their growth, they reported over 36% growth year over year for their fiscal year and over 22% for the quarter. This is really an exceptional year when you consider that we're in the throes of one of the worst recessions in many, many decades. GameStop has a very strong balance sheet. They have less than 24% debt, and as you can see by this report here, they've really had impeccable operating results over their entire history, and their forecast to continue to grow at an attractive rate going forward. When you correlate stock price to their operating results, you see that the company's stock price has followed earnings very, very closely all the way up through 2007, trading at around 18.8 times earnings, which is the normal price-earnings ratio that this company has commanded. There was a period starting in 2007 where their PE ratio got very high, came back into a normal 18 multiple by September of 2008 before it finally succumbed, as a lot of companies did, to the recession from a stock price point of view. But I think the important point that this chart clearly illustrates is that nothing has happened to GameStop in terms of actual operating results in the recession. The only thing that's gone down is their stock price. Their company's profits and growth has continued to be very, very strong. In fact, they had the best Christmas they ever had in 2008, and they're continuing to rack up just exemplary performance. And they gave very, very strong guidance going into 2009 as well. The key point I want to make about this very, very attractive retailer is the current valuation. In our opinion at Great Companies, there are two things that ultimately drive long-term investor results. The operating results, or the growth, the rate of change of earnings growth, and as you can see, at 31%, GameStop has an exceptional operating history. And the second is valuation. And when the stock is at or below its reasonable valuation based on its ability to generate earnings and cash flows, it's an attractive investment. We think at 11.4 times earnings, a significant discount from its typical 18.8 price-earnings ratio that the market has awarded this company throughout its entire history. This is an excellent time to be purchasing GameStop. As you can see, the stock had fallen in 2008 all the way down to under $17 a share. As of March 27th, it closed at $27.83, and you can see by this picture here that there's a strong return to a normal price-earnings ratio beginning to happen in this company over the long run. We believe that this company is significantly undervalued at these levels. If you look at it from a price-to-sales point of view, it's trading on the low end of its historical price-to-sales ratio. And most importantly, if you look at a consensus of the leading analysts that follow the company, and I will tell you this company has some distractors. Everybody seems to want to talk about Amazon and Toys R Us and other companies coming into their turf, but the reality of it is this company has a very, very powerful niche. Their used game business seems to be the area that most people talk about. It generates about 23% of their sales, but 46% of their profits. But the reality of it is this company has a very, very strong moat. The used game business is a very, very difficult business to enter because it's not just about trading in video games. It's about processing those games and refurbishing those games and having the knowledge and ability to do that on profitable basis that actually has kept many from competing with them head-on hand. There's an enormous amount of growth in the gaming industry. This company, as you can see, has a terrific track record. Had you invested in this company and, during the length of this presentation I've done here in 12/31/2002 and put $100,000 in the stock, it would have grown to $567,954.64 or dollars. That's a 32.1% compounded rate of return, which I might add correlates very, very closely, as should be expected, to the operating growth of 31%. It was a little bit below its normal 18 multiple at the beginning of the period, and it was below the 18 multiple at the end. So buying this stock at this kind of valuation, we think, is a terrific long-term opportunity for investors who are looking to make a long-term investment in a company that has very, very strong fundamentals and is trading at a discount to its earnings justified level. We believe GameStop is a terrific buy here and should be looked at for investors who are looking for aggressive long-term growth. It's with a market cap just under $5 billion. It's kind of a large mid to a small large cap company, which we also think positions as well as mid and small caps tend to lead the marketplace out of recessions like this. So we think all in all, when you add everything up, this is a terrific company on sale, and it's a great time to be building positions in GameStop.